Welcome to the Stock Option Assassins free trade of the week. My name is Eric, and today is Tuesday, May 5th, 2015. Happy Cinco de Mayo. And this week's edition of Trade of the Week, we're going to take a look at today's sell-off and several stocks to consider getting long on if and when the dust settles on this kind of sell-off we had. So also, if you haven't done so already, be sure to subscribe to our YouTube channel for more technical analysis videos and strategies. Let's start with the SPY. You can look at the sell-off we had today. It's pretty ugly. The market closes on the lows, and you can also see we're down a little bit over 1%. I've also got this little pattern on here. So, you know, a lot of talk about the head and shoulders pattern. This is starting to form, hasn't actually triggered, but you can see we have the left shoulder. We rallied back up, made a new high, kind of came back in, making a lower high, and we're, potentially going to take this out. And the 200-day is actually way down here. I don't have that positioned here, but I do want to show you if and when, if the head and shoulders does play out that pattern, the way we can measure kind of a minimum move is take the head to the neckline, and then what we'll do is we'll duplicate this. And let's just say that happens in a couple days. You can see that this move would take us somewhere around the 202 mark. And if I'm going to restore some other indicators, you can see that over here, the 200-day moving average is right around there, around 203. So, that could be a scenario that plays out. We haven't had a big correction like that in a while, and it's looking, close. Although the bulls have often come in and kind of saved the day. We'll see if that happens this time. So one thing we'll notice here, if we go over to the Russell, we've been following the Russell with our members, that Russell's in complete breakdown mode. We had a short squeeze fire short, and this basically is telling us there's a volatility break to the downside. And, the Russell was one of those leaders on the way up, and it basically just kind of broke down here. So if the Russell is sort of an omen for the market, then it's potential that the market breaks down as well. But obviously, there's some jobs report coming out on Friday that could, obviously negate all this stuff. But we'll see what that looks like. So what I want to focus on is what to do if and when the dust settles here. So I'm not advocating buying tomorrow or anything. What I'm advocating is if and when the dust settles, let's say we do get the sell-off to the 200-day moving average, what are the stocks that I want to buy on this dip, right? I don't want to buy on a one-day dip. I want to wait for confirmation. One thing I use, I'm going to expand this again, is and we use this with our members in the service as well as our swing trading course, is we use the DMI oscillator. And what the oscillator is telling us right now is that we had this dip and the oscillator is making new lows. We use a value of -10 as sort of a potential trend change, and the market's actually hitting that. It rallied back up to 0, and now it's starting to make a new low, although price is not followed, but this could precede price. So what I'm looking for a buy signal is if and when the market, let's say, retests some of these other lows, and we get another little buy signal on our DMI stochastic, that could coincide well with a potential support area where we could get long. So what I want to do right now is go over some names that I think are worth looking at on this potential sell-off. We'll see where it heads. But so these are no particular order. I want to start with Amazon, and some of these names are going to have a similar kind of theme where they've reported earnings, they've gapped up or rallied, and they basically just kind of pulled back under the normal weight of the market. So Amazon had a huge rally. Their cloud business is booming. It kind of pulled back. Actually got a little kind of mixed signal here. The oscillator did not tick up, but the stochastic extreme did. But I would wait for the market sell-off to be over. We don't know where that ends. My guess is that Amazon comes back to, I don't know it's going to get all the way back to this gap fill around 400, but I was kind of looking at this 420 area. So we'll see if it holds. So I like Amazon on a dip. Amazon is a great name to sell spreads. We do have options expiration coming up. So if we, sell off for a couple days, you may be able to sell something like the 410, 405, something like that put spread, with the idea that options expiration next week could potentially, this thing could bounce up and you could, kind of sell some premium on the sell off. So that's something to keep an eye on. Apple, I'm long Apple shares, not options. More of a longer term trade. I think 120 is going to be key support if it gets there. If for 121, 122 doesn't hold, this is a longer term breakout area that it never got retested. So if Apple pulls back, we get a buy signal. I'm either buying calls or selling spreads if the market starts to put in a bottom as well. Another name I like on the radar is GILD. And again, this is more of a earnings reaction. So they reported earnings, they popped, rallied a couple days, but then ultimately they rolled over with the market as well as the IBB. So this is a name I just want to keep in my back pocket. If we get the mother of all sell-offs and GILD can pull back to 96, right? I'm not saying it's going to happen, but 96 has been huge support, and we do have a little, kind of a positive earning reaction. I would be a buyer of GILD, whether you buy stock or options, whatever. I would be a buyer of GILD down here. If it can maintain the lower band, we could look for an entry here with the idea you could leg in down to 96 and then place a stop, somewhere below that. So GILD is long. Disney, I'm looking to get into Disney as a longer term trade. I would love for Disney to sell off to the lower band here around 105, 106. And I would just scoop that up and hang on to it. You could also buy calls. You could sell put spread since it's over $100 stock. This is a good spread selling candidate, although the premium isn't super high. You're probably better off buying deep in the money calls or just buy the stock itself. Starbucks, ticker SBUX. Again, earnings pop, pulling back with the market. Buy when it's oversold. Look for the buy signal. Financials are hanging in extremely well here. My two favorite names are Goldman Sachs and JP Morgan. Let's take a look at GS. GS could easily pull back to 193, which should be strong support. Great name for selling spreads, buying calls, so we'll see if that hangs in there. JP Morgan, I mean, it doesn't even care what the market's doing. It is very overbought now, so I love a pullback. But again, back to the mean or back to the lower band, I think you can buy JP Morgan call options looking out to June, possibly July, depending on when the market finds a bottom here. So GoPro, not Pro, GoPro, G-Pro. Same thing, earnings pop, it pulls back, look for a lower band buy. We're pulling back to zero. This is often support. This is often a good support area as well. When this ticks back up, comes back to zero, look at this signal, back to the mean, ticks back up, you get a buy signal, you can get long here, look for the next leg up. We never quite touched this level. It came pretty close to this gap fill, but never quite touched it. I think this is a signal that GoPro is going to go higher. The question is, is the timing. So obviously that's what we're waiting for. Two more real quick. Netflix. Netflix got upgraded today by Bank of America. Again, earnings pop. Trading sideways, extremely strong signal. It does not care what the market does. I don't know what the right entry is going to be for this one. We're actually getting a buy signal today. I usually don't like to buy things on upgrades because a lot of times when these, analyst guys, they upgrade it, a lot of times people are dumping their shares. So I think this is an upgrade where you're dumping these shares on a market sell-off. The idea that they're going to buy this thing lower. So I would look for 530 as key support. This is the gap window from the earnings pop. If and when we get there, let's say we get there in the next few days, I would look at selling, something slightly below that, 520. Put spreads into May expiration next week with the idea that this thing could hold and you can sell some premium. Otherwise, long-term play, if it sells back, you just buy the stock. Last one, we're going to look at Google. Google, again, earnings pop, fading with the market. Not as strong as the other names, but I think Google's kind of just in a choppy mess. So, yeah, it's kind of come down to this level and held. So, maybe it gets ugly and comes down to 500. I don't know. But I think you at least give it a shot at 520 and look for, your indicators, whatever oscillators you use to kind of turn back up. You sell put spreads against Google's. So that is it for this edition of Trade of the Week. Make sure, if you are not a member already, sign up for our free Trade of the Week membership, and I'll see you at the next update.